Hello traders and welcome back to the Friday Wrap-Up. This is August 29th, 2014. Great to be with you. Remember, this is brought to you through FXCL Excellence in Trading. Traders coming to you live from Pattaya, Thailand. Rainy skies, windy, ugly beaches, and not a very nice day today. But we have sunshine in my office and it's great to be with you. Traders, if you would let me introduce myself to you. My name is William Gilday. I'm your moderator through the Friday Wrap-Up series, which is done every week after the New York close. Traders, I've been trading from the year of 2006 and 2008, came over to Thailand for a 3-month vacation, and never went home. Traders, I'm still here, and it's great to be living in Thailand, retired, and trading the Forex markets every single day. Traders, got a lot to talk about today. Let's move over to the risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most importantly, do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's talk markets. How did we close yesterday? Being that this is the Friday Wrap-Up, the Dow 30 closed up barely at 0.11%. The S&P 500 closed up at 0.33%, and the NASDAQ 100 closed up at 0.40%. Nice, all in the green. Taking a look over on the other side of the pond, it looks like the Eurozone did pretty well itself. The DAX closed positive 0.08%. The FTSE 100 closed up at 0.20%, and the CAC 40 closed up at 0.34%. And the Eurostock 50 also closed up just barely at 0.02%. Taking a look at the Asian markets, the Nikkei 225 closed down negative 0.23%. The Shanghai closed up at 0.97%. And the Hang Seng closed up just barely at 0.04%. And the S&P ASX 200 out of Sydney, Australia, barely closed in the green at 0.03%. Ending this round, the KOSPI 200 closed negative at 0.29%. Commentary for the week is, what a sluggish week. Trading was a little difficult this week. You really had to be on the stick this week. Couldn't leave the charts, had to stick around. Monday was terrible. Tuesday was okay. Wednesday we had some moves. Thursday and Friday was not very well. A lot of stuff happened late, though, in a lot of the late New York time session, where, of course, I am not at my charts. Traders, that's about 2, 3 o'clock in the morning for me, so I do not get to see the New York afternoon closing of the New York markets. However, on all, we did get some moves this week, but they were hard, and you really had to concentrate on what was going on. It was not an easy week to trade. The good news is that our summer is coming to an end. Monday is Labor Day in the United States, and as you know, all the U.S. markets are closed, and Tuesday we should be back to full force and full volume and full volatility in the markets, so maybe we can get some trends moving here and make some profits and get those pips. All right, traders, let's move over and let's talk daily charts. Traders, I got over 10 daily charts I want to look at today. We're going to go through them pretty quickly. So let's start, as we always do, with the euro dollar. Look at how bearish this euro dollar is. If you remember, over a month ago, I said this was going back down to 1.31, and traders, we are only 35 pips away, and we're going to be at that 31 level. So I think now it's possibly going to go lower than that. There's no good data coming out of the Eurozone, so there's nothing positive there, and the dollar is pretty strong. All right, coming over to the pound has turned bearish on us. However, if you look at last week, Wednesday, Thursday, Friday, you can see that we had 3 higher lows and higher highs. So I think the pound is just doing a fib here. And it's possible that the first 2 or 3 days of next week, we're going to see this coming back up to the 23.6 at 1.6690, which is also very close to the 200 exponential moving average. And we might see a bounce heading back to the bearish side, if you look at it technically. All right, let's take a look at the dollar yen. Now, I don't usually trade the dollar yen. I use the dollar yen as a tool, but I'm going to tell you, traders, the dollar yen is coming to life. The dollar yen is up to 46 pips a day trading. Remember, trader, this is a pair that used to only trade 30, 32 pips a day. So this pair is starting to wake up and might be added to the watch list on a daily basis to make some pips. We'll have to keep an eye on that. However, it is at resistance, and you can see last week it has come down, but yesterday, being Friday, opened up, taking out the last previous candle. So we're going to be very interested to see how this handles this 104 level. It did make it to 104.10, so we'll see if it can sustain staying above the 104 level on the dollar-yen daily chart. All right, let's take a look at the wacky Aussie. Yeah, the Aussie dollar. This pair has been unbelievable. It is just all over the place, and yes, it's a commodity pair, so every time somebody speaks or some number comes out, it reacts. But I have to say, it has stayed mostly above the 200 exponential moving average at 0.9290. And currently, you can see the trend line I have in there. It's a valid trend line. It's a 3-touch trend line, and it's there. And we'll see how this reacts coming into Monday and Tuesday. However, look at right below the trend line, we have the 200 exponential moving average, which is support. So we'd like to see a breakout on either side of this, and then we can start trading this. I haven't traded the Aussie dollar, my friends, in a long time. It's just so unpredictable. You just never know which way it's going to go. All right, let's go over to a pair that I really enjoy trading, and that's the New Zealand dollar. Look at this. 200 exponential moving average at 0.8497. It has remained there for quite some time, over 2 weeks. We have been below the 200 exponential moving average. It is bearish. Well, we have dollar strength and New Zealand weakness ever since over a month ago when New Zealand decided to increase their interest rates again. So the markets didn't like that at all, made them make a big drop, and they've never recovered from that. And then when they had bad reports over their dairy situation, the New Zealand has been very weak, and of course the dollar is very strong, and these are the kind of pairs you want to do. Weak against strong is wonderful, so let's just buy the dollar. This is the dollar CAD, and they call it the loonie for a reason. However, the reason I put this in here today was I wanted you to recognize how it came down to that 200 exponential moving average and actually spiked through it. However, it closed above that, ending at 1.0875. So it's going to be interesting to see on Tuesday or Wednesday how this looks later into the week if it can close below that 200 exponential moving average. My guess, traders, is it's not going to happen. And we know Monday, nothing's going to happen. In fact, if I was you, I'd go play golf on Monday. Monday's going to be absolutely dreadful. All right, let's go over to the pound Aussie. Another great pair to trade. I don't look at it enough, and I really need to watch it more. But this is a beautiful trade. Look at this, traders. Broke through the 200 exponential moving average at 1.7975, traders, and stayed below that. And we're going on 3 weeks that this pair has stayed below the 200 exponential moving average, and it is just bearish, stair-stepping away and staying bearish. So we want to stay with this pair, and if we're looking at this later in the week, we're going to take this to the downside, hopefully to the bearish side, and see if we can come down to possibly that 76.50 area. Would be a really nice spot for the next support area, and we'll see what happens at that point. Maybe we'll take it back up, but at this point we are bearish in the pound Aussie. One of my favorite pairs to trade in the last 6 months is a Euro Aussie. This has been the ATM machine lately. I have to tell you, this is just beautiful. It is still bearish. Look at this beautiful stair-stepping trading on this daily chart, just going down. It's so bearish, it's unbelievable. I'm waiting for this to fib, so watch your lower time frames, like your 4-hour and 1-hour time frames, for this to fib, and then just take this bearish. There's nothing else to do. Again, the euro is very, very weak, so there's nothing to do with the euro, so let's just take this down and just keep selling this pair. All right, let's take a look at the Euro New Zealand. I haven't looked at this in a long time, and why do you think I placed it in a range, as you can see, as I marked on the chart? And the reason I did this is because we have the euro, which is weak, and what else is weak? The New Zealand, this is weak. And I wanted to show you that when you have a pair that's weak against weak, what happens? It ends up in a range, and that's exactly what's happening here. Both of these pairs are weak, and you end up, even on a daily chart, it is just weak. Nothing to do with this pair. Don't even think about trading it. All right, let's go over to the Swiss yen. Swiss yen's pretty lackluster myself. I don't look at this pair very often. I had a request to take a look at it. However, for the last 2 weeks, it's hugging that 200 exponential moving average at 113.29. So as long as this stays above that 200, we'll look to long this. But I'm going to have some confirmation. It's going to have to take out the previous high. And I don't think that's going to happen for at least till Wednesday, Thursday of this week. If it does that or it's going to dump below it and just continue to go short. But if you look at this chart spatially on this daily chart, this is bearish. All right, let's take a look at the New Zealand yen. And this again is sideways. Again, week against week, sideways price action, but it is hugging the 200 exponential moving average. Not a lot to say about that. Not a lot to do. And just leave it alone. I wouldn't even go near this as far as trading this. This pair before, if you look at it like a month ago, it traded very nicely, but now it's just sideways because you have two weak pairs trading against each other, and there's just nothing you can do with that. Traders, I do not know why I have the euro dollar in this again, but I did stick a trend line in here on the second euro dollar chart that we have in here, and I wanted you to notice the trend line, and the trend line is pretty important. And notice I stuck a support line down there at 135.73. So what I'm saying is, every time this comes up and hits this trend line, and it's hit it 3 times, it's bounced off it and continued to the downside. So maybe when this breaks this trend line and heads and gives us a bullish candlestick formation, we could take this back up to the 200 exponential moving average at 138.05. All right, guys, let's take a look at the Aussie yen. Aussie yen, what can we say about the Aussie yen? This has been a great pair to trade. It's been all over the place, but I have to say for the last 2 weeks it's been extremely bullish, trading well. Look at this pair. It is, however, at severe resistance at 92.21. I don't think it's going to make it up to, 97.21. I don't think it's going to make it up to 97.40. I think we're going to see that the bears are going to take control here. I think the reason you see a blue candle on Friday's chart is because of profit taking and position squaring. If you look at the 2 days before that, we had doji, so I think this is starting to get weak, and I would expect this to start to go bearish again. So keep an eye on that when you get down to your lower time frames, i.e. the 4-hour chart and the 1-hour chart. Traders, one of the favorite pairs I love to trade also is the pound yen, the beast. It's a great pair to trade. It's been bearish lately. However, I did put a trend line in here. This is like a 6-touch trend line, and it is closed on Friday above that trend line. Again, could be because of profit squaring and position taking profits and all that good stuff. But we'll have to see what happens on Tuesday. I wouldn't do anything on Monday, traders. I know I said that once, and I'm going to say it again. Do not do anything on Monday. Just keep your computers off and go to the beach, go snow skiing, go play golf, or do nothing and just hang out and watch TV. But I wouldn't be in the markets with the New York session being closed totally. So there's no New York markets. All right, traders, last one I wanted to bring up to you. This is the last slide we're going to look at, and this is the dollar index. And I wanted you to show you this dollar index to show you how powerful the dollar has been. And traders, this is probably 2 months worth of the dollar index. Remember, this is a daily chart, and this is bullish. There is dollar strength. No matter what you say, the dollar is very strong. It remains strong. However, next week, remember, is non-farm payrolls 1 week from now, so we'll see how that goes. So we have some interesting numbers coming out next week. However, again, what can we say? The dollar is strong. Buy the US dollar. Traders, on behalf of myself, William Gilday, and our great friends FXCL Excellence in Trading, I'd like to thank you for joining me this week for the Friday wrap-up. Remember, traders, we do the market opening preview every single trading day before the London Open. Please join me there also. Traders, have a great weekend, enjoy your break, and we'll see you on Monday. Traders from Pattaya, Thailand, take care and bye-bye.